It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, live 3 p.m. Eastern Time, Friday. I forgot to give the date this morning, Friday the 5th of April. And, my pleasure to be here, second time today. Did not realize that I would suddenly have an opportunity to be on at 3 to 4. I did manage this morning. I had a problem with my charting service. It was my fault, and still my fault. I got almost everything back, but not everything. However, I certainly have enough to do whatever I need to do right now. And I'd love to take your calls. Maybe you weren't expecting me to be on. I wasn't expecting to be on. But if you're out there, let me know at 877-927-6648. And let me just do this at the beginning because I completely forgot to do it at the end of the show this morning because some people tune in a little late. I'll do it now, and hopefully we'll do it at the end of the show. Where is it? Right there. I will be on live in San Francisco on Wednesday, the 10th of April, at 6 o'clock till 8 o'clock in the Sheraton Marriott Marquis, San Francisco. This is on, 55 4th Street? I think that's what it is. And I'm really it's starting to fill up. We need to know how many people will be coming because obviously I would prefer not to have people standing. I'd like to have all seated, and I managed to actually get extra chairs. So we can take the extra accommodation. So please, if you are interested in looking at charts, asking me questions, but you know what? I'm hoping that we're going to be able to have name tags, or at least I won't have your names, but you'll be able to write your names down. I like to know who you are. Put the face, to the voice, or the emails, or the IMs, whatever it is. If you're in the Den and you're in San Francisco, hey, I'm really looking forward to seeing you. And give me, this is something that happens often. Like when I give talks here, like here in the Boston area where I'm from, in Newton, Massachusetts, I often give a talk over at MIT for the Boston Investors Group. And people come up to me and talk to me as if I know everything about them, but I don't see who they are. And then when they leave, or they IM me or email and say, "Oh, it was great seeing you last night," I say, "Oh my God, that was whoever it was." I wish you had told me what your Den name is. I would automatically have said, "Oh man, I know people. I know the names in the Den." So please tell me who you are. Give me a little information. I'm looking forward to it. Okay, let's get that out of the way. It's done. I'll see you 6 o'clock Wednesday evening, this coming Wednesday evening in San Francisco. I bet you the weather here is going to be good. It's going to be good in San Francisco as well. Okay, so now this is what I'm looking at. Let's get rid of this, take it out the way. I'm just going to go there. I was asked just a moment ago about USG. It's a fantastic stock. I was also sent emails are coming up. Yeah. We were very fortunate. I was looking at a certain sector. I had nothing to do with that sector forever. And then suddenly there was this incredible arch formation, and it came right to within 1 point of touching the left side low. We were able to go long this morning. So it gives us a cushion. It doesn't mean, fantastic entrance, blah, blah, blah. What it does say is if you get a nice entrance, and that is off the bottom when the stochastic is turning, where the price is turning, where the MACD is about to turn up, and it's about to touch and maybe even break over the 9-period moving average, it means that you have a cushion. That's all it means. It doesn't mean the ChapmanWave going to peak A, B, C, D is going to work. In this case, I don't think it's going to work because this is just a nice percentage retracement bounce that I'm anticipating. But if you get in correctly, we'll go from the 120-minute chart to the daily. Then we'll go from the daily, if it holds, we'll try to see if we can get to a leg D, and that maybe is B in the weekly or A in the weekly. We don't know. Or we could be stopped out. But that's the way you want to look at these patterns. So here I'm looking at a pattern. I'm going to run the numbers in a minute. But I think this is even more important. I had a question in the Den. If I would look at the USG, I had actually mentioned, I popped in and said, SPG, Simon Properties, it's an amazing stock. Even under duress like this, it's at all-time highs. And I'll talk about, if I get a chance, I'll talk about what's going on in the Boston area, certainly in the in the Chestnut Hill area. The incredible overbuilding. I'm calling it overbuilding. Let's call it building. We'll find out if it's overbuilding. That's underway and being some in completion, some almost completed, and some just being started. Now, Kane in the Den asked me about USG. Well, USG, of course, what's this gypsum board and all that? It's at a spectacular move. Why have I lost my notation there? It's not good. All right, let me just do this real quickly. I always identify the left side low bar. In this case, $3.60 back in October of 2001, and $3.30, can't remember what I even said, $2.80 in June of 2001. So that goes peak A, monthly chart A, to B, and then to C. And then what happens is a very sharp pullback. So I'm going to put a C minus. But that doesn't mean to say it really has to be a C minus. I'm just saying that the decline of the time was very long. It reignites. It actually reignites with an overlapping wave, and it goes to D. Then it goes to, and there's another, and this is is this an instant restart? 1, 2, not quite. So it has to have a down arrow, an up arrow. So there's your first up arrow. And the reason why I want to take a moment to talk about this, because if USG is showing some signs of coming back here, the question I was asked earlier in the day, could we be seeing a bottom here and some kind of a high-level consolidation or even a breakout to the upside? I said it's just a little early for me to actually say that. The reason why I just didn't want to go fully onto the short side, I still see some strength, enough strength to say, hey, you just got to be careful. So that particular low of $2.80 happened to have a decent run. Well, I'd say it's a pretty good run. Now, I'd say it was a really good run. You know what? I'd say it was a very, very good run because it went on April of 2006. It went to $121.70. Well, you had another opportunity. It went down to $4.16 in March of 2009, the month of the exact low. And then what did it do? It went peak A to B to C again, C minus I'm calling it. And then it starts another A, and I'm calling this D/B. It's above the 200-period exponential moving average. It's shot above it. It went from that low of $4 and something to $30.97. I would say that's a pretty darn good, 1,000%. That's pretty good, over 1,000. So now it pulls back under the 9 p.m. 9 moving exponential moving average. That's this black line. The golden line is the 200 period. Can you go from 9 to 200? Yes. When you need it, and I need it now because it needs to hold that and turn it into a base. The MACD is still very strong, and the slow stochastic is at 86%. So that is in the housing sector, and it's doing very nicely. The housing stocks have had quite a bit of a pullback. We'll look at them in a moment. So the candle that we're looking at right now, there's a black candle, is that right? Yeah. That candle that we're looking at the highs of the week, is that right? Yeah, at the high of the week, even though it's down way below the 9-period moving average, with the MACD and the stochastic still very poor, says to me, you've got to be a bit careful here. If you want a retracement, that's the way I would play this, as a retracement. And if it goes high, that's fantastic. So now the question I should have asked Kane is, are you in this at all? Are you long? Are you not? If you are, then I'm going to say this is real easy. If you just got in, look at this particular chart. This is the daily chart. There was a beautiful arch formation. It took its time going up, and then it took its time coming down. I've chosen a particular candle to go to the left side, right side price time match. You bought it. You're using the 200-period moving average, folks. I've had so many really good calls. Just people that are responding to what we do here at TFNN. It's really very rewarding, it just makes things so worthwhile. I had something from Larry. Thanks to your methods, this is right now. This is at 10 past 3 today. Thanks to your methods, I was able to grab the ETF near the first 1 minute buy signal around 10:30. I mean, really, Basil, how many people on this planet can even do this sort of thing? It's all about you. You know, that's a great compliment. Believe me, I'm a human being. I make mistakes just like anybody else, but the method itself is really a fabulous method. But as a human being, mistakes. Your method that I'm studying, thank you. Thank you, Larry. So this is the same thing. We're looking at a technique that says if you use that particular entry point, it makes it so much easier because now you're up. It's up 99 cents at 26.50. The low that it tested at 24.17 was the low of the doji candle, that beautiful low candle of the 15th of November, with a low of 23.43. So 23.43 is it's within 80 cents of the exact low, and you've got your stochastic going under 20% and reversing up. You've got your MACD, which says you're still got to be careful. So now it makes it easy. What I'm going to say to you is, Kane, what I'm going to suggest is, if it pulls back in the next couple of days, it's over the 9-period moving average. The low was 24.17, and right now it's at the high of 26.54. No, I'm sorry, it's 2 cents off the actual high. But it makes it real easy because if you go to the 120-minute chart, look at that beautiful turnaround. So this is leg A, this is leg B. I would have a target of the 200-period moving average of the 120-minute chart. If it holds this gain, and Monday it doesn't even have to hold there. It needs to try to tag 27.03, the high of the bar in the 120-minute chart at 11:30 on the 28th. If it does that and it holds, the target would be 27.56. Now I'm going to make a suggestion. If in fact there's weakness on Monday, the day's young, we still got another 40 minutes or something. But if there's weakness on Monday, and USG core pulls back, and it only pulls back to, say, 25.96 to 25.78 is the 9-period moving average, and then it actually starts to move up again, and the stochastic is getting closer to 80% on the next rally, I'm going to suggest that you start another little position so that your core down below can have a stop that says if it goes towards the 27.30, 27.50 area, your core position takes no prisoners. The stop is absolutely sacrosanct. What moving is, this is this golden one here, or brownish. Let me just see what I'm looking at here. It's kind of looking gray on the chart that when I look at it through Tiger TV. This particular one that I've highlighted right there, that's the 200-period moving average, and that's the candle I'm looking at right there. In fact, during the break, I'll do a little designing there. The Dow's down 87 at 14,518. S&P is down 11 at 1548. Comp index is down 31. Gold is up 25. I didn't realize that. Great. At 50.78. Silver's up 47 cents. And
many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as I was saying, the bonds are up $1.50. We'll talk about that in a moment. And the dollar is down 18 cents. That has just been spectacular. So now, when I say spectacular, I'm talking in relative terms because it's one of its poorest percentage gains from its last low to where it is now. But it's been great because it's been really the benchmark for the other currencies. And, of course, the currencies themselves are made up of many currencies. Just the weighting is different. So the USG, as I was looking at before, if it's able to have a good rally Monday, regardless of the market conditions, the real test is going to come at that high bar of the 120-minute chart at on the 28th. It was the high of 27.03. And you can see how things are coming together. You didn't need this 200-period moving average at all when it was going down. But as it gets closer, it becomes a magnet. Where would it fail? It would fail certainly if it takes out anywhere in the 25.60, 25.50 area. It's a point and a half, $1.10 lower, $1.20 lower. But this is really good action and speaks to a couple of things. It speaks to the home builders, that maybe the home builders selling maybe is lightening up a little bit, although some areas are still having tremendous competition. The whole Brooklyn area is just on fire. Well, you don't want to say on fire. That's not a good term. It is hot, very hot. So this is a base of support. Now, when I look out a little further, I'm starting to see signs cracking. And my suspicion is it's making lower highs, and it looks like it could start to make lower lows unless it powerfully. Yep, exactly. You have that storm damage that's still going on. I mean, I'm hearing about people in Rhode Island, Long Island, and Staten Island area that are still just now beginning to be able to do the work. So 27.93 is absolutely imperative. If it's able to do that, and by Friday, a week from Friday, no, I'd even say by Wednesday, when I'm in San Francisco, about to do the presentation and workshop, right about Wednesday the 10th, towards the 6 o'clock to 8 o'clock area, if it's rallying nicely, it could in fact make a cup formation. Now in the monthly chart, yeah, I would say that it looks like it could be early in its move, but I would absolutely change my tune at any point in the next 6 weeks if it takes out between 2270 and 2170. Then I'm going to say, uh-oh, a timeout is unfolding. Very important. So week technicals in the weekly, monthly technicals are very good, but kind of flattening out to dipping a little bit. The daily has had a tremendous decline. It's ready for a bounce. And I would say that here's another technique you might want to use. You see this green line here? That is the fast-moving average of the MACD, the moving average, convergence, divergence. They're the numbers over there. The histogram is at minus 0.75, but it's starting to improve. So what I'd be looking at is what is the price doing when USG, if USG rallies and that fast-moving average is about to cross or deflect from the red one, the slow-moving average? Will 14% be the start so that it can get to 20% of the stochastic? So it's just a great entry. It's a great, treat it as a bounce that might have legs. You're going to have to let the stock tell you, and we won't know, at least I won't know until I see further evidence of sustaining and perhaps even making leg B. So I hope that helped you. Now, let's do a couple of things here. I wasn't able to do this morning. Remember I was talking about the Dow? I made up that particular candle, and I said, it's above the up channel support, major support. Let me open this up so that it doesn't look so messy. There you are. And I'm going to call this peak F, although if it took out, all it has to do is go to 14,383.01. 1 penny lower, and this buy signal goes to a buy mode immediate, a sell signal. The short-term sell signal that and sell mode that the 120-minute chart has will go to a sell mode, right from a sell signal to a sell mode in the daily if there's any cross of this particular line. Well, first of all, the low of 14,383.02, and this line is sacrosanct and is rising. So that would be 14,353, which I'd be looking at in the up channel, because if it goes under the red line, got to be careful. And the MACD's down, stochastics at 69%. So you've got to be careful here. This is really selective. Selectively long. I say selectively long in the sectors that have been the absolute massacred on the downside most recently. For a bounce, I have to treat it as a bounce, that's all. And the bounce could be a couple of days. It could actually last a little longer. I don't know. I'll be right back. We've got Tom in Tampa called, and I'll be right back with Tom in Tampa.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is the live 3 to 4 o'clock edition. And let's go to Tom in Tampa. Hi Tom, how are you?
Good, Basil. How you doing?
Very well, thank you.
Good. You ready for that weekend?
I'm absolutely ready for the weekend and going to visit the little grandchildren, so I'm looking forward to that. And then Tuesday, flying away to San Francisco.
Hey, there you go. Nothing wrong with that.
That sounds good to me.
Yeah, that's it. Hey, Basil, what do you think about shorting the euro here? Do you think that baby wants to run on up there about 133?
Okay, so now this is very interesting, folks. We're going to look at, I'm just going to get rid of this particular chart, and what we're going to do is I'm going to the EUR-USD. I'm going to use the currency pair. I'm just having trouble with the futures right now, so let's go to the EUR-USD.
Yeah, that's what I'm looking at, that pair, that US dollar, right.
Now, this is very interesting because the MACD and stochastic gave a divergence, a very strong positive divergence, as the price was going down from the low of, I hate all these numbers, 1.27502 on the 27th of March to yesterday's low of 1.27440. So the MACD and stochastic were very strong. Now you've got the price movement with the currency pair, euro-dollar currency pair. But I wanted to see if it would take out 1.30473. It just missed taking out the high of the 25th of March. To me, that's really important. Now, are you looking at Tiger TV?
No, I'm not. I'm not
okay.
right now.
Well, do you use the 200 period exponential moving average at all?
Now and then.
Okay. Well, put it onto your daily chart, and you don't have to move, you keep it there permanently, but just try it out, and you'll see that it's like a magnet line, and the price has been above, below, above a little bit, and then more below,
yeah.
and you see that? Well, all of a sudden today you touched it again. Now this is going to be very interesting, because I was talking about it this morning and mentioning how in the monthly chart it keeps having these failed rallies, and this was one of the worst rallies up to peak B. And it was peak D in a left side, right side price time match in the weekly chart. It failed to get to the high that I thought was a possibility, which is 1.4246. So it didn't even have the strength to get there. Now, if you look at it, in a way it looks more like a swallow flying, a bird with big wings that curve over, than an inverse head and shoulders, with the shoulder over there with a little doji low, the week of the 13th of January, head at the bottom with the left side, right side price time match, which came in exactly the week of the 27th of July. I missed by one week. And then it came back up and failed, and now it's holding again, and that support's going to be very important, the support around about 1.272. So the weekly chart says this is just a bounce. The monthly chart says it's not very good action. The daily is saying, I'm trying my very best. This is like the little engine that could. So now you're talking about, you don't have a long position. You're only talking about where would it be appropriate with the least risk to short. That's really your question, right?
Exactly.
So there's a whole barrier of resistance, because the magnet of the 200 period moving average says it's going to have to be a spectacular move. Well, actually, let me try and do a left side, right side price time match to this candle. No, it can't be that candle. Well, just be conservative, I'm going to take that one, and we'll see if that's going to work out. And now we go to the right side. Yes, there we go. So today is the 5th. You've got the 8th, the 9th, the 10th. By the afternoon of Tuesday afternoon into Wednesday morning, you want to see if it's able to at least try to get to first the candle of the 15th, 1.31063. And then if it's able to do that, the real key is going to be the high of the 8th, 1.313. If it gets to that level, I'm even going to say to you, I would wait to see if it makes an arch formation and it curves over. But if that becomes tremendous, if it gets there, and that becomes very strong resistance, you want to see it pull back immediately to 1.30, probably it'll be about 302 at that point, which is the 200 period moving average. And if it closes underneath it, you've got yourself a really good trade that can retest the low. And that's the low of yesterday. But here's the issue. I'm seeing some strength here on the technicals and the daily. And the technicals are saying, be careful. This is almost the same as the Dow. And when I'm saying, be careful, I see internal strength that hasn't yet been resolved. I really can't put my finger on it. There's just enough technicals to say, I didn't want to go full out short. I just want to have a short position, more as a position play and more as a cover for any longs that we have, because the same with the euro. I'm seeing enough, in this case, enough residual strength that it could really get there and maybe hold. And I can tell you this, that if it breaks 1.32 by Tuesday afternoon, Wednesday morning, instead of sliding below 1.288, this thing can go it could go almost, I would even say maybe a week to 2 weeks on the upside. This might, in fact, be following gold right now. Let's just look at the GLD. How's the GLD doing? Yeah, it's not exactly, but it's got a similar testing and breakout on the upside pattern. So here's my recommendation. You don't have a position right now.
No.
I'm going to suggest that you hold off a little bit, let it play out. we will know you'll know very quickly on Monday if this thing is back into the 1.29 area, 1.28, it's going to fail. And then I would say to you, you know, you could short it because it's probably going to retest the low, but it might also be that it's making a sideways pattern. It's building a little bit of a base to have a bit of a bigger move. And a bigger might be price, it might be time, it might be a combination, but I'm going to say hold off now. Give me a call. I'll be here Tuesday. I plan on doing my show Wednesday. Tuesday or Wednesday, let's look at it again. Give it the whole of Monday and let's see what's happening, because a lot of people are looking at this and saying, hey, what's happening? Because the dollar, I hope I can get the DXY, it didn't do that. So it made this pattern, which is either, this actually could be a peak G/C. Oops, I've got to get rid of that. In the dollar, I'm watching the dollar really closely because the technicals are failing. The price is holding quite well. Let's see what happens if the dollar actually pulls back and it takes out. Oh, yeah, something for you to watch. Do you follow the dollar index?
A little bit.
Okay, just pick up the dollar index and look at on the 15th, the low was 82.05. If the dollar breaks under 81.75 by Monday afternoon or Tuesday morning, I suspect that you're going to get that euro bouncing to the upside. They might just be in play. You see how this is so fascinating. If you're looking at the chart, you'll see that the dollar, in fact, has made a high level consolidation. That means it's had a huge move, and instead of breaking down, it's glued to the upper part of the highest highs that it's been making. The euro, EUR, USD, is doing the exact opposite. It's trying to form a base, but it's being glued to the bottom part. So I drew this in, and recently someone had asked me about the euro, and I said, just give it 1 or 2 more days. In fact, we had those 1 or 2 more days. Probably would have got stopped out because yesterday's low was a little bit, just a tad lower. But I'm going to draw this in, and you've got yourself a kind of a very deep dish, a curved dish to the downside with a slightly rising right side. I'm going to say just give it a little time. We'll be watching this together because there's a chance that it tries to get to that resistance and it's just merely stuck in this range. And when it tries to test the highs that I was talking about, that'll be the equivalent of the dollar testing the 82 area, the lows that it'll be making. So good question, long answer. Succinct answer would be, hold off, let's look at it again Tuesday or Wednesday. I wouldn't do it prematurely unless on Monday it just dives. As it's diving, I would say you can grab it as a short, especially if the dollar is running strongly. But right now, I'm going to say hold off.
It's just been so oversold too, and it came gushing out of there. You know, the upside.
But Tom, you say oversold. Oversold would imply that it should have a V-shaped rally to the upside, which maybe gold could. That's oversold. So the fact that it's going sideways is saying there's really not that much strength. So I'm calling it a counter trend bounce, and let's see where it goes to. Right. I suspect if the dollar remains strong, you're going to have an opportunity to get a really nice short on this. Just have a bit of patience, that's all.
Yeah, okay.
So have a good weekend. Thank you so much for calling.
Enjoy them grandkids.
What? Oh, yeah, enjoy them. Yeah, certainly will. Thank you. So, folks, let's just look at this. Oh, my goodness, look at this. God. You know, I've been talking about this, and I couldn't understand it, and I sort of understand it. I'm not able to put it in words, articulate it as well as I should. The Dow's only down 55. It's that week. I'm going to spend a lot of time on this sort of thing on Wednesday night in San Francisco. Just as for my subscribers, I keep explaining and showing this to them. I just have to demonstrate to you. You see this doji candle here? You see the little doji candle in the Dow from 2 weeks ago? See it last week? Slightly higher high. You see this doji candle here? Now look at this. Do you see that up channel? I hope I can make it clear. Yeah, it's pretty clear. You see the dashed line top there green. See the dashed line there red. I did that because I usually make it thicker, but I didn't want it's already a little bit too messy. I don't like messy charts. Let me make it clean. There. And you see that black line, the 9-period exponential moving average at 14,296. Now you tell me, why the Dow is not hitting 12,350 to 12,296 when there was a plethora of bad news, especially kicked off this morning with that jobs report. You tell me. All I can say to you is that Doji Cannon is going to be really important. What if the question that was asked of me in the email this morning, let me see if I can find it here, in my email, would it be possible, Basil, would it be possible that we bottomed again? Please see my chart. I have that there is a possibility for the move to go to 1600 as the E-minis before a bigger down move happens. My 3.618 on the fibs is a calculation for wave 5 and Elliott wave. And a really fabulous study with a ChapmanWave notation all over the show, and showing exactly the support that was needed for wave 4, and now with the potential for wave 5 to be starting. Wouldn't that be something if we are looking at wave 5 of Elliott without even going more than 1% or 2% to the downside? It's phenomenal. You don't get these moves very often in markets. But look at this. If the Dow closes above that 9-period exponential moving average, yet again, this is the daily chart. I'm sorry to keep jumping to these different charts, but you know the way I work. I look at all these different time frames. That's going to say that if you are looking at this line as major support, then a close above, let's get it exact, a close above 14,565, and right now the Dow's at 14,560. It doesn't look right. My eye says it doesn't look right. No, it's right. If there's a close, now the Dow's down 45 points. I mean, is this something or is this something? And look, the TLT. Oh, you know, I love the market. It's just such a fabulous creature. It's just untamable. Look at this. Oh, this is what I wanted. The TLT gapped up on a Friday to leg D or E or F. In this case, this is D. The unbalanced volume is extremely overbought. The MACD is very strong at 90%. Sorry, the MACD is very strong. The stochastic is very strong, also at 90.76. How the TLT resolves the gap is going to be so important. And what's going to happen is that in the weekly chart, this huge single leg A up. You know, I've got a technique that I call the single leg A up phenomenon. And that phenomenon basically says there are times when it can spiral higher and then come back down. And how it comes back down is going to be very important because you've got levels that are very important. Let's go to Mike in Oakland, California. Oakland, California.
Woo!
Yes.
How you doing, Basil?
I'm doing well. How are you?
I can't believe I'm talking to you.
Why?
Oh, because I've always thought about calling you, but what it is I'll be seeing you next week in San Francisco.
Oh, fabulous. You're going to be there? I got my best friend lives on Snake Road in Oakland.
Okay, that sounds like it's up on the hillside or something.
Yeah. We went to the conservatory together. Fantastic trumpet player. Used to be principal in the San Francisco Opera, and just a wonderful
You know,
guy.
I've never heard you talk about it, but it seems with your musical background and the ChapmanWave that there seems to be some sort of connection in the neurons there. You know, like the cadences and, you know, and chords. Sounds like we got a break coming up.
Yeah, we've got a break coming up. And you want to look at McDonald's?
Yes.
Okay, we'll talk about the cadences. We'll talk about in the octave in music that you go 4 notes and 4 notes. You can only go A, B, C, D, E, F, G. You never go to an H. And we'll be back with the ChapmanWave and Mike.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi, folks, we're back. The Dow is down 48, S&P is down 9, Company is down 21, and we are on right now with Mike from Oakland, California, who I'm hoping to meet on Wednesday night in San Francisco at the Marriott Marquis, 6 o'clock till 8 o'clock for a free presentation and workshop. Sign up at TFNN front page. All right, got that in. Mike, do you have a position in it?
I do not. I've been watching this thing for a while now.
Yep.
And I'm amazed how it just keeps creeping up, and it's got that high from last year at about 102.22.
Exactly.
And
right
now it's just about to hit it. So the question is do I just close my eyes and take a position, or what would you do?
I tell you what I would do. Right at this moment, the upside. Well, there are a couple of things. Let me do this real quickly. In fact, it's a great question to answer on Wednesday because it's a stock that many fund managers look at. There's a technique that I use that's called the ChapmanWave cup and ladle.
Right.
That's where you just breaks out of the left side lip, which the daily is done. So it's got a parallel wave count of F/B in the daily count. But this is more important. The weekly has made a cup formation. I drew this in ages ago. Someone had called me. And I showed a left side, right side price time match in the weekly, which goes to next week. And it says by next week it should break 102.22. But the methodology says that it should go to a leg D and then a peak D. But what happens if it breaks out in leg D? If it breaks out in leg D and it's still going very strong, it should go to it could go to a D much higher, but it could still go to an E. The monthly chart has improved the technicals a lot, and it says exactly what you're talking about. The 102.22 area, that area between 103.30 and 101.50, that's where you would expect the greatest resistance. So I'm going to make it real easy.
Okay.
And a very small position. This is, I'm not calling it gambling. I'm talking about using the process as ingeniously as you can. If IBM breaks out above 102.2, I'm sorry, McDonald's goes above 102.22. I talk about IBM because it has the same pattern at the top. 102.22. At 102.23, you could take yourself a trading position, a very small trading position.
Okay.
With a really tight stop of 1.5 points, not even 1%, make it 1%, 1 point, or a little bit more.
Sure.
And that should take you quickly to 103.50 to 104.30. And immediately your stop becomes your entry point. Okay. I'll explain why. In the company ladle pattern, in the weekly, if it powers through that with the MACD so strong, and the MACD is interesting, MACD, and we're talking about the MACD, McDonald's. So the MACD is very important for MCD, MACD. So what you would be looking for is a trade that would be real quick. Within 3 to 5 sessions, you should be able to get 3 to 4 points.
Starting today, right now.
That's going to help the Dow. So
starting right now, because I haven't taken a position. We got like a few minutes before the whole thing closes.
No, you've got to wait for 102.23.
Okay, so we're waiting for a new high.
Yeah, and then you're going to have a 1 point stop because it's going to say this is going to be one of those fantastic breakouts, or it just stops dead. So let's make it as simple as that.
Yeah.
And
no,
by the
it
time,
explains why the Dow just keeps going up. Because
yeah, and there are just a few stocks that are just acting so well like this. So I hope that answers your question. Come and say hi to me and say, I'm Mike from Oakland. Don't just say hi.
Yeah.
I want to know. You're Mike from Oakland. So I'm looking forward to seeing you. And let's hope you took the position. And let's hope that McDonald's is at 105.03 on Wednesday night when I see you.
Are they going to have a buffet there?
Nothing. Absolutely. I was so lucky to even get a room. We're going to have chairs and meat.
I'll bring the fries and the shake.
You don't have to bring a thing. It's going to be so exciting without it. Don't worry.
All right. Thank you very much.
Stay tuned for Tom O'Brien coming straight up. A fantastic show as always with Tom. And I'll be back on Monday. Have a great weekend. And don't forget, sign up in San Francisco for the Marriott.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.